Good evening and welcome back. And it's another talking technical. Well, if you must tell me that we are in November, I cannot believe it. We're almost at the end of the year, and I've got the feeling that I'm still in February, but we're in November. So, if we look at some of the requests that we do see here, I see more and more traders and investors are getting optimistic about the market. And I just read this week that companies are close to um, all-time highs. The DAX I saw the other day is a merely 7% from an all-time high. Our market is about 5% from an all-time high. It's only the American markets that's lagging a little bit. Of course, the Hang Seng is lagging a little bit. But I get an idea that investors has forgotten the word risk, and that everybody believes that markets must just recover quickly, and that you must just buy and you must just carry on buying and things will come right again. But we've seen in this year, and I hope maybe we can see, if we've got a little bit of time, look at Bitcoin's chart, and then we can just see that some of those instruments really had an awful year, and that is just an illustration of the yes, instruments can go lower for much longer, and you can maybe lose some money on the markets. But let's kick off with the first request, Barloworld. I mean, this is a top company in South Africa. They are doing well. I see they also want to almost, you can say, unbundle their car hire business, and I wonder how that will go on the markets. If I look at this chart here, I mean, what can we say? Beautiful rounding bottom. There's the beautiful rounding bottom. That looks good to me. I like that. And look at the numerous higher lows that we're seeing here. And that always tells me that there's some investors buying the dip, and that they believe that the share can just go a little bit higher every time that they buy the dip. It's just something that I do pick up here, and that is this little head and shoulder forming here. And there's the left shoulder and the head are there, and we're busy working on a possible right shoulder. Let's just zoom it out a little bit so that everybody can see. It's quite a clear head and shoulder formation here. And keep in mind that since September, I mean, that's about 3 months away, it rallied all the way from 85 to 112 in almost 3 months. That's a 25% gain. And the neckline is sitting at 104 Rand 62 cents. And if the neckline of 104.62 turns into a resistance, we can maybe see this, and I mean, this is a top company, maybe just see it pull back on this head and shoulder formation. So it's just a little note of caution to say that yes, we can maybe see some profit taking here, and it can maybe take the company back to this support line there of 97.95. But of course, company is doing well. I think they're making some good money. And of course, if it can go a little bit higher, it will probably mean that it can reach back for that old high just recently, and that is around 110 Rand 67 cents. Let us look at Motus. Now, Motus, of course, is also in the business of cars. And if I look at this chart, that makes me a little bit nervous, because it's not just a tiny little head and shoulder that we've seen at Barloworld. This is quite a bigger head and shoulder forming. And if I look at this chart, I just want to get the line there. There you are. There you are. There's the neckline. And here is a clear left shoulder. And you see this massive head, well defined. And we're now working on the possible right shoulder. Still a little bit of work to be done before the right shoulder will get to this neckline, and this neckline sits at 114 Rand and 11 cents. But at 114 Rand and 11 cents, this neckline will be confirmed. And what I don't like about this share, it looks like that this neckline is been tested quite a few times, and every time that it gets close to that, the share gives us a little bit of a bounce there. Look at that, it bounced off that. So if it breaks below this 114, I'll be a little bit nervous on Motus. And look, when it rallied up, it came all the way back close to this neckline, and it bounced off that. So let's hope that 114 Rand 11 holds, and that is the neckline, and that the share doesn't go below that, because if it does go below that, that will mean that the share stop is in place, and we can easily then see that the share reach first of all the conservative target. Where's my conservative target? Conservative target is at 107.11. And where's my full target if it does play out to the downside? Let's just have a look here. It can take this company all the way down to 94.51. Maybe this share is a little bit under pressure because people are starting to buy less cars. I've seen the other day a chart of second-hand cars in America. That market is really, you can almost say, under huge pressure. This is maybe the case with Motus, because they also in the second-hand car business. Yes, they also sell some other brand new car names, but a big part of their business is the second-hand dealerships. So maybe that part or sector of the business is coming under pressure, and that's maybe why we see this right shoulder developing here. But of course, let's hope that I'm wrong, and let's hope that above 123.40 we can see this right shoulder disappear, and the share can maybe build some new momentum to the top. Let us look at the DAX. Well, that is of course the German index, and why I've said that the index is merely about, let's say, 8 or 9% from its top. Let's just maybe give a little bit of background on what is happening in Europe. Europe is sitting with massive inflation. There is real chance that Europe is going to run into a terrible recession. I mean, they just next door to the Ukraine, and the Russians are still busy with it. They've got huge energy constraints. That economy is really struggling to make ends meet, and people are suffering. Now you're asking yourself, how can this index then be merely 9% from its top? I mean, look at this rally. Just from September, it rallied from 12,110 straight up to 14,000, let's call it 380. The only way that could take place is that big fund managers decided that index offers value, or that they look forward and they say that yes, the worst is behind them, and that they want to buy that index, or that they see that they want to take risk. So if this is the case, and if we look at the chart, there's the clear indication that that trend line did break. It tells you that the momentum is turning to the upside, and that means that the bulls or the risk takers are in control. That means there's a disconnect between those that are buying the index and the real economy, unless the real economy is going to prove us all wrong, and the market is going to recover, and then we'll probably will be not that far away from a brand new high. That brand new high was in late 2000 and 21, and that was sitting at 16,140. So that is your choice. If you are a risk taker, then you must go in and buy the DAX. But for me, I see a little bit of a straightforward lamp pull formation. I would love it to maybe build a consolidation before I get in, but only time will tell, because the interest rate cycle is still ticking higher, and I don't know if this interest rate cycle will tame inflation. But only time will tell, and I don't know who's going to be right and who's going to be wrong. Let us look at New Market Corporation, and that's a share listed on the Nasdaq, and I like this chart. This is the kind of chart that I like, and you guys know by now that I like charts that is coming from the bottom into the top. And if I look at this chart, it's quite easy. First of all, if I draw in my trend line, here's my trend line. It was a resistance, it turned into a support, and I see a falling wedge. And what do I see? This falling wedge has just triggered up, and above 308.72 it bounced up. For me personally, I will not buy the DAX. I'll rather put a few cents in this one, and I will buy above 308.15, and above 308.15 this share can maybe surprise us and go where to. There's the band there. I just want to extend it a little bit. It can maybe go all the way to 366.10. And what I like about it, you've got a nice tight stop loss of 297.82. So that's the end of this week's show. Well, enjoy the website www.fransklerk.com for more info, and we will chat again.